What's going on? Today we're just going to be talking about market structure fundamentals. So first of all, what does market structure mean? Market structure is simply just how price moves. It's the rhythm of highs and lows, and it shows whether buyers or sellers are in control. I like to think of it like the skeleton of the market. So every single chart, whether it's the 1 minute chart or the daily chart, they follow the same structure. Price moves up, price moves up, it moves down, it pauses, and then reverses, and does this in repeating patterns. So, for example, price could be in an uptrend like this, going up. It could pause at the top, and it could start consolidating. And then after it consolidated at the top now, we can now break structure to the downside, and now we can start that downtrend, right? So it just constantly does this in different sequences all the time on different time frames, and that's just how the market moves. It moves in uptrends, consolidations, and downtrends. So now, let's continue. That's just an alert. Let me turn these alerts off real quick. All right, so there are three market conditions in any market. So there are three market conditions in every single market. There are three environments. So first of all, we have an uptrend. An uptrend is when buyers are in control, and characteristics of that are simply just the market making higher highs and higher lows. The next phase of the market we have is a downtrend. In a downtrend, the sellers are in control of price, and price is making lower lows and lower highs. The third phase is a range or a consolidation market. In that phase, neither side is in control, and price is moving sideways between support and resistance levels. So I'm just going to show you guys that in a second. All right. So first of all, like I said, we have an uptrend. An uptrend is simply the market having a high, and we make a higher high. This high right here is higher than this high, so that makes this a higher high. Next, we form a higher low. This low right here is higher than this low, so that makes this a higher low. So an uptrend is just a constant sequence of that, of price making higher highs and higher lows. So when price is doing that, that just shows that buyers are in control of the market. And I can show you guys a practical example of this right here in the price. And the indicator, if you guys are just starting off, if you want to have an indicator to help identify higher highs and higher lows, you can just put on the swing point indicator, and then now it identifies every higher high and higher low. So looking at the market overall, it's been in an uptrend. What have been characteristics of this uptrend? We've been having higher highs and higher lows form, right? So we have a low right here. What happens? We form a higher low. Then we form another higher low, right? Simultaneously, we're making higher highs. Higher high right here. Higher high right here. Higher low. Higher high, right? So it's just a constant sequence of higher high. And then now for the market to switch from being in a bullish market to a bearish market, like we had right here, we had a short-term market structure shift. We had a short-term trend shift right here. So the market was making higher highs right here. We made higher highs again right here. Higher highs, higher lows. I keep pressing the wrong button. Higher lows, higher highs, right? And then what happens right here? Right here, yes, we have a higher high just by a little bit. Then what happens? We still have a higher low, but then with this high right here, we have a lower high. So this right here is the first signal of the market potentially shifting from an uptrend to a downtrend. And right after that, what happens? We have a lower low. So at this point now, the downtrend is confirmed, and now the market isn't trading, making higher highs and higher lows no more. Now it's making lower lows and lower highs. Lower high. And now right here we had our lower low, and then what happened? Higher low. So we short term switched from being in a bullish market to a bearish market, and then now price started making a higher low right here. Again, right after that, we make a higher high, higher than this high right here, and then we have another higher low. So at this point, we know that the market isn't in a bearish market no more. It's in a bullish market because it's now making higher highs and higher lows when originally it was making lower highs and lower lows. So that's really it for trends. It's pretty self-explanatory. It just takes repetition. You just got to get into your charts. You got to practice it. You have to study it. You have to mark up your charts. You just have to get used to it. And then before you know it, it'll become second nature. So now we can just draw it real quick. I use this tool. It's called the path tool. If you guys want it, then all you gotta do is go to this line right here. Oh, nope, it's not in there. Okay, it's in here actually. So you click this little place that has the brush, go down, you got the path. I favorited it, so now it's gonna be up here forever. So the three types of markets, again, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. That's an uptrend. Usually before the trend shifts, we get like a little bit of a consolidation. So that's back and forth, choppy price action. And you guys want to remember, in these choppy price action, consolidation ranges, we don't want to be trading, right? These are really low probability levels. So when the price is just making higher highs, higher lows, it's not picking a direction. We call that range bound trading. And when the market's trading in the range, we just simply want to stay out the market. So we just want to stay out until we have a confirmation of the market trending in one direction. And then we just want to trade with that trend. Common saying is the trend is your friend. So you want to swim with the tide instead of swimming against it. So that's all we're doing inside the market. So boom, we have that consolidation, and then we break structure to the downside. After we break structure, lower high, lower low. Now the downtrend's confirmed, and now we'll just trade this trend to the downside until we have a consolidation and then a confirmation to the other direction. So now, we just talked about this. Lower highs, lower lows, right? Like I said, if you guys want to get an indicator, go up to your indicators, search up swing points. And if you search up swing points, you would get some pretty good, you would get a pretty good indicator on swing points. I'm pretty sure they have one in TradingView, a built-in one. Yeah, so, does it? Yeah, so swing points, this is the one I use. AJMD Trades. Oh, shit. So yeah, equip the swing points, and then now you just get a visual representation of each higher high and each higher low. So lower low, lower high, lower low, lower high, and then we have a higher high, higher low. And of course, we're using this in combination with other confluences. So it's not, we never just use a market structure by itself. We're using market structure in combination with candlesticks, like we talked about in the last video, in combination with support and resistance levels, liquidity levels, fair value gaps. And we're going to get into all that in later videos. Another key thing to look at is equal highs and equal lows, right? Equal highs and equal lows, that's another very key thing to look at. So yeah, so transitioning between phases. Structure doesn't just stay in one phase forever. It transitions: uptrend, range, downtrend. Price makes higher highs, higher lows, and it fails, make a new higher high, and the flat forms. And then now, once it breaks below that previous higher low, that's the first sign of weakness, like we're just showing in the charts. We can even just go through some more examples. As you can tell, the market's just been in an uptrend for a long time now. We could just even go on the daily chart. Just going on the daily chart, what's this right here? This is a consolidation. This is one of those choppy back and forth price actions. So the market has a high and a low, and then we just stay within this range. We stay within this range. So the market isn't trending in a specific direction. And we broke structure to the downside right here. And what happened? Started to go down. Came up, right? But it was still in that downtrend, so price kept on still going down. And what happened? Higher high right here, breaking above this high. Higher low right here. This would just be our first sign of the market switching from it being a downtrend to an uptrend. So we're just using this as something to see where the market is overall going to. So it's just a good framework for looking at the market. Just starting off, you want to be able to read trends. It's one of those foundational skill sets that you need to lay the groundwork for to build your trading career overall. That's it right now for market structure. Tune in for episode 4. I got some game coming for y'all. Peace out.